Let's get to some hot picks in luxury stocks. We are joined by Markus Hansen, Portfolio Manager at Vontobel Asset Management. Thank you very much indeed for joining us.
Thank you for having me, Andrew. Good morning. Happy New Year.
Happy New Year. Start off, please, with your thesis on Richemont, the maker of jewelry. What attracts you to this name?
Absolutely. So just to be clear, Vontobel Quality Growth, we're a global asset manager. So we're always looking for fantastic franchises and brand companies, which can complement, good performance in U.S. assets as well. Keep in mind, we're looking also at diversification. Consumer discretionary is an area we find some great franchises. And so coming to Richemont specifically, this is a Swiss-based company, which is a holding company for two major assets, one being Cartier, the other one is Van Cleef & Arpels. So two of the iconic top brands in jewelry. It's a 120 billion market cap company with about 26 billion of revenues. 80+% of the earnings come from the jewelry business, which is benefiting not only from a long heritage, so there's a proven track record here of over 100 years. We look for good proven track records, but more importantly, pricing power and strong demand as we see jewelry moving more and more towards branded. Good delivery, good execution, we think is a great one to have. And this is a company which is part of the whole luxury high end, very much is a combination of controlling demand, keeping margin and growing returns.
The chief financial officer at the end of last year apparently warned, though, that higher prices for precious metals are putting pressure on profit margins. That doesn't turn you off?
Not at all. If anything, actually, we think the move in the precious metals market, because there's a combination, they have the ability to hedge going forward and they lock in some of their supply, is actually maybe driving some of the attraction in jewelry that we are seeing versus other consumer discretionary high-end spending. It's interesting also to note that despite these companies, Cartier itself has been around for 150 years, Van Cleef just over 100 years. They do constantly innovate. And in fact, their new love bracelet, Cartier is renowned for a bunch of different things, but their love bracelet is very famous. They have a new version which continues actually to outsell. And there's been issues actually getting that. So that allows them to have pricing power, which more than offsets what we think would be some of the margin pressure.
Your next idea has that evocative ticker symbol in America, RACE, Ferrari.
Yeah, you couldn't pick a better symbol, right? Ferrari's been around for 80 plus years. Effectively, it's a luxury goods company that happens to make cars, so things on wheels. But really, if you look at the remit of its P&L, its returns, its margin profile, it's very akin to some of the top iconic luxury brands. This is a 66 billion market cap company, revenues of about 8 billion. And the story here really is a controlled volume management of this business over time. They could sell more cars tomorrow if they wanted to. They don't, primarily to retain the exclusivity, but also they're aware of the fact that what they're creating here is a very valuable asset going forward. Obviously, a bit of a lackluster 2025, but if you look at the track record here of 3, 5, 10, 15 years, the performance is phenomenal. And we think this will be another one which also benefits from what we're continuing to see is good spending on the high end, but also demand for quality, unique assets going forward.
And then your final name also involves fast cars, a Formula One group. I guess we're not going to be buying these cars, but they are part of the whole luxury ecosystem.
Yeah, so again, coming to consumers' discretion, actually, sports franchises in particular are very interesting. They're very unique. And it's very hard to actually find sport franchises that both you can invest in and also are profitable. Traditionally, actually, things like teams don't actually make a lot of money. Formula One is very interesting. Formula One has been around since 1950. And here what you're buying is an asset which was part of the Liberty Media Group, which was originally a tracking stock. And this is a new investment for us. We liked it because they converted it into an asset-owning operation. So the F1 Group basically has the right to manage the F1 Formula One racing brands around the world for a long-term commitment. They make their money in three ways. One is they host races. So cities around the world bid to host races for a number of period of time. There's 24 races every year. The race season runs from around March to December. They also make money from TV media rights. Depending on the numbers you look at, this is the third or fourth most watched sport on the planet. Obviously, there's the famous F1 race in Montreal, but in the United States, it's really been in the last 3-5 years, they've expanded to add a total of 3 races. But outside of North America, this is phenomenal following. And the third area is sponsorships. If you remember when we were kids, most of the sponsorships you saw on F1 cars tended to be tobacco or car and auto parts and oil companies. Now the sponsorship has really expanded to include consumer brands all the way from LVMH to Google and other tech companies. And the viewership has also expanded globally as well. The other kicker here which is interesting, is that they also acquired MotoGP, which is almost the Formula One equivalent of two-wheel motorcycle racing. That became part of the group at the end of last year, represents about 10% of the revenue base. And we believe they're going to do similar things with how they expand that franchise going forward as part of this Formula One group. So again, we're looking at a business about 25 billion market capitalization, greater than 4 billion of revenues. And we think those three lines of drivers can drive consistent top line and earnings growth.
I got to admit, for me, car racing is watching paint dry, but it's one of those sports where when you know, I think, what's going on, you get much more pleasure out of it.
Andrew, can I recommend then watching a clip from MotoGP? If you think F1's a bit boring, MotoGP is faster, the overtaking is a little crazier, and the action and the camera angles are very interesting. So again, definitely worth watching. It's a fantastic franchise and again, sports franchises historically, when we look at these things, the value isn't just from the earnings side, but just the following in terms of eyeball and viewership.
That's interesting. So the motorbike racing, you reckon, has it might draw me in?
It might draw you in. So when watch a couple of the races, you'll see what I mean.
That's right. Yeah, I remember in my youth they used to have that motorcycle race in the Isle of Man that was infamous. Poor guys would get smashed up doing it.
Yeah. So fortunately today safety has come in quite nicely, so it's helping a lot. You've seen that on the Formula One cars, also MotoGP.
Yes.
But really, what's very compelling here is just the global nature of the brand and the franchise's reach. We don't think is reflected in the current valuations.
Markus, thank you very much indeed.
You're welcome.
Markus Hansen, Portfolio Manager at Vontobel Asset Management.